It's no coincidence. These things tend to move hand in hand. It's no coincidence the US has a relatively expensive currency versus much of the rest of the world. It also has a relatively expensive equity market relative to the rest of the world. Here you see price to book ratios of those same economies. So the same economies tracked as major currencies on the previous chart by the OECD. Here we're looking at those benchmark equity market indices in those same markets, and we're looking at their price to book ratios. So you see the US now currently at 4.99 price to book, just under 5. Very high, obviously the highest in this group by some margin. Switzerland is next in line. This is the price to book of the Swiss market index, and then you see some of these indices well below where the U.S. is. Turkey again. Close to the far end of the spectrum, below 1. You see Korea well below 1 as well. Here's where maybe some of the opportunities lie. Some of these economies are very volatile, some are very slow growing. But you see the Eastern European markets here. You see Poland, you see Hungary at the farther end of the spectrum. Poland, for example, with a 1.47 price to book. This is a very rapidly and has been a rapidly growing economy. The other economies in Eastern Europe, you don't see the Czech Republic on here. It doesn't make the list of the major currencies, but it has a 2.1 price to book. We don't see Romania on here. It doesn't, again, make the list of the major currencies, but it has a 0.6 price to book. And a lot of these numbers very much dovetail with other valuation metrics. No surprise, price to earnings ratios, price to sales ratios. The US comes out at or near the top via those metrics, and we see a number of economies far below the US. So again, if we're moving into a new environment, and that still is somewhat in question, but based on where these valuation numbers are, and valuation is very much a structural issue, we should be gravitating in that direction, at least structurally, over the course of the next several years. That means opportunities in these economies in general, and it means some specific opportunities in these economies where the currency is relatively undervalued, in some cases significantly undervalued, and where equity markets are in some cases significantly undervalued as well.
To watch this month's complete analysis and receive daily updates directly to your inbox, become a member at cycleframework.com.